Hey everyone, hope you're doing well. Welcome to the Loft and welcome to this week's weekly update where we take a little bit of time just to look at my dividend investing portfolio, see what's changed from week to week, do a few comparisons, and overall just check the health and see how it's going over time. So if that's something that does interest you, remember to subscribe so that you can keep up to date with this. And if you're interested, go back to the beginning of the series to work through to where we are now. Anyway, that is enough chatting. So let's jump straight into the portfolio, starting off with the value, which is currently sitting at a value of £3,327, which is up from its position of last week at £3,302. Overall, this is a return increase from 11.6% up to 12.4%, so an increase of around 0.8% and a change of around £25 in actual cash. If, as normal, we compare this to the VOO, we can see we were slightly outbeaten. The VOO went up around twice the percentage of my portfolio, reaching an increase of around 1.6% compared to the 0.8% of my portfolio. Overall, not particularly concerned there. My portfolio is still growing, even though it's not growing as quickly as the VOO. Often it doesn't have as many drops as the VOO as well. So with that done, we can move over to buys and sells, which is nice and quick because there weren't any. So let's move on to the more interesting topic of dividends. So over the last week, we had a total of 8 dividend payments coming from a total of 7 companies, and this totaled an outcome of £4.62 in overall dividends for the week. All of these payments came in on one day, which makes it slightly easier. It came in on the 18th. Starting with Main Street Capital, they sent over a lovely 65p as normal for the 5 shares that I hold. Then we had Realty Income, they sent over 44p for the 3 shares that I hold. Pembina Pipeline jumped in with 42p for the 4 shares that I hold, and also Stag Industrial, they sent over 45p for the 6 shares that I hold. Now that is the end of the monthly paying dividends that come every single month. On top of that, we also had Store Capital, they chipped in a lovely £1.67 for the 7 shares that I hold, and Cardinal Health also sent over 30p for the 1 share that I hold. On top of that, we have ING, and this is where the discrepancy of 8 payments and 7 companies come in. So ING initially paid 39p as their ordinary dividend, and that was in exchange of the 2 shares that I hold. On top of that, I also got a bonus dividend of 30p for the 2 shares that I hold. So overall, I did get a total from ING of 69 pence in dividends with a 30p bonus from the 2 shares that I have. Now, that is all of the dividends, and as I said, it comes to £4.62. which is a good amount for a week if I do compare that to my past history of my performance on my portfolio. So hoping to smash through the £10 target this month. Anyway, let's look at some interesting bits, which is what companies are actually doing the best and doing the worst in return of percentage growth on the actual investment that I've made. And here, looking at the best growers, again, we've got ING. They paid out a dividend and they're also up 141% on my initial investment, showing that I should have bought a lot more than 2 shares when I initially bought some of the company. After them, we have Simon Property Group. They have 118% increase, which is nice, and they were sending dividends as well as that as normal. So we have seen an increase of 118% on Simon Property Group. And the final top 3 of growers is Wells Fargo, and they're up a total of 74%, so not quite 100% like the other 2. However, we do also have to look at the worst performers if we're going to look at the best performers to get that overall transparent view. And in regards to biggest drops and percentage of investment, we have Hormel Foods, who are down 19% on the initial investment, followed by AT&T, who are down 14.7%, and then very close on their heels, we have Omega Healthcare Investors down 14.6%. So overall, we've got a lot bigger growth than we do the downs, though it is worth looking at these companies to see if they've become even more in value or if potentially there are changes to the business that are going to cause issues. Personally, I still see value in AT&T with the upcoming changes and potentially Omega Healthcare, and I may look to buy some more shares there, but I do need to do my research, as do we all. So that is it for today. If you did like the video, remember to subscribe, and if you want to watch this entire series from when I started my YouTube journey, do check out this playlist here, which will go through that, and you'll see the improvement, hopefully, in my video quality and recording skills naturally. So that is it. Until next time, remember to invest, subscribe, and I'll see you next time.